Welcome to the tax-free savings account presentation. It should be, I think it's a great time of year to be looking at this event. The first thing is that tax year end is rapidly approaching. I cannot believe we are already in February. We have literally a month to go until tax year end, and that means that this allowance, if you don't use it, you're going to use it. Now, Werner is going to take you through all the ins and outs of a tax-free savings account. He's going to go through the rules of a tax-free savings account, some of the things that you can put inside a tax-free savings account. Many people don't realize that a tax-free savings account is not an investment vehicle in itself. It's actually just, it's at least an investment product itself. It's a vehicle. It's something that you can put different investment products inside. We obviously have managed options for clients as well. Werner's going to take you through all of that today. So before we start, just to give you a little bit of a background on who we are and what we do. So first of all, why should you listen to us? The fact is that for the last 2 years, we've actually been ranked as South Africa's top tax-free savings account provider. So that's 2020 and 2021. This means that we beat out all the big banks, we beat out everyone else around our product. Now, part of that, I think, is because we have a managed option. A lot of it, I think, also has to do with the fact that this is essentially pro bono work for us. We see this as such a crucial building block to absolutely every single investor's wealth building journey that we essentially do most of the work for free. There's some small frictional charges that we have to charge in terms of brokerage. Doesn't even come to us. It actually goes to the stockbroking license member. But the idea behind our tax-free savings account is really just to benefit clients. Now, we run it as a loss-leading product, which means you do need an additional product with us to be able to access this. But today we're going to go through kind of what makes us the best TFSA provider and how you should be structuring your TFSA. So not just set it up, stick some cash in it, buy some stock, but what stock should you buy? What is the right type of instrument to put inside a TFSA? This is all stuff that we'll go through. And as I said, TFSA, it really is, it's one small portion of the overall product suite that we have. We do everything from private client broking to online trading. That's really where the business started. We started really as a stockbroking outfit. So very, very much, like to work with clients that wanted to manage their money themselves, just wanted to give you guys access to platforms. We like the high touch, high service model. Unfortunately, as the business is built, we just haven't been able to keep those personal relationships with absolutely every client. That's why we do so many of these webinars to try and assist you guys in one, just managing your own money better, but just giving you also the tools that you require to build up and successfully grow your wealth. So online trading, this is where we just give you the systems. You're kind of responsible for everything. Private broking is kind of like where we started. It's that traditional high service stockbroking relationship where you'll have a dealer at the other end of the line. You're welcome to phone us, chat to us about your different positions, and we're going to kind of really, obviously turn on the service and try and make you as much money and try and keep you as happy as possible, because at the end of the day, happy clients are really what we're looking for. And I think when you've got a happy client base, all the rest of a business takes care of itself. So online trading, you do everything yourself. You have to rely on webinars. Private broking, the minimums for private broking kind of slide depending on the level of the service. But it sits between about 1 million and 5 million, depending on what we need to do for you, and also depending on how busy the desk is at any given time. But once you're in that private broking net, you obviously get access to preferential research. As I said, you get that kind of very, very high service level offering. And of course, we will bring ideas to you as well to kind of try and complement the strategy that you've outlined to us. Obviously, we can't do this for every online trading account. Remember, online trading accounts literally can start at as little as 10 grand. You can trade from as little as 80 rand, I think, on one of the smaller FX contracts. It's not viable when we're charging you 50 cents maybe a trade for us to give you that full service, but absolutely it's something we would love to do, but that's why we do a lot of this additional webinars and kind of one-to-many service offering. Then, of course, we've got managed portfolios, which is kind of where I run most things. Now, interestingly, a managed portfolio is essentially a personal share portfolio, but it's one where you give discretion under Cat 2 license to a manager. And then we've got various strategies that we run on behalf of clients. We've been very, very successful over the last 5 years. We've outperformed our benchmark, which is the MSCI World Index. And clients have done very, very well. If you put it into my global managed portfolio, if you had put funds into the global managed portfolio 5 years ago, you would have more than doubled your money in dollar terms. Now, the reason I think managed portfolios are important to understand today is that even though we're talking about tax-free savings account, we actually have two options on tax-free savings account. One is a fully managed option, which Werner is going to take you through. Now, remember, because we see this as a pro bono, it's a gift product. One, the government's giving you a gift in terms of your tax allowance. But two, we're giving you a gift in terms of we'll do the management for free because we want this is an ultra long-term product, and we see it as just something that is very useful in keeping our client base very, very happy. So we're going to chat a little bit about what it means to have a managed tax-free savings account, which actually does fall under managed portfolios. With Governor, you've probably seen him on TV and at some of these webinars as well. He takes care of our structured product division. This is really medium risk products that offer some level of capital protection for a contingent payoff. And very, very interesting if you're kind of getting a little bit of nervous about where the market's going, you've got capital that maybe can't be deployed for 5 years. It is very, very interesting medium risk products that you can have a look at. And then, of course, offshore transfers. This is kind of a subsidiary business, but I mean, we do have a cost advantage because obviously we move, probably about 85% of our asset base at the moment, our client asset base sits internationally. Weirdly, even though our offices are at the Johannesburg Stock Exchange, the majority of our trade actually happens on international exchanges these days. It's I think the globalized nature of finance. But to kind of service that, we obviously have, we run a full treasury service as well to just help, make the whole process of moving funds internationally seamless. That sits inside our treasury department, and because we're doing it for all our clients, our existing clients, we really can pass on incredibly low costs especially compared to the banks. But even other specialist international transfer houses and treasury houses, they don't kind of do the volumes that we do. And because of that, and because it's not really a product that we're trying to make money on, it's just a product that, again, it creates part of the beautiful ecosystem that we're trying to build. We can give you very, very low cost rates there. So if you are looking at using those allowances, which have just reset, definitely give us a call. Christo is probably the right person to talk to. Otherwise, you can chat to one of the other guys on the desk as well. And then obviously the final service is wealth management, which is taking care of Yaku, certified financial planner. And it's when you maybe don't understand too much about managing your own money, but you want someone to have a look at your retirement. You want them to look at your income and expenses. You want to make sure that you have enough money to fund your lifestyle and to make sure that you're being responsible with money. And that's a much more holistic service to the online trading or private broking or even managed portfolios, which are individual building blocks of an overall wealth management strategy. So, all of the products I mentioned in the beginning, they can be used in conjunction with your own wealth manager. Wealth management is just if you want us to take that holistic view of there. And like I said, we've got Yaku, who's been in the market for years and years and years, an incredibly knowledgeable person. And then finally, the thing that we've won a couple of awards for in the last 2 years, and the thing that Werner is going to take you through, is our tax-free savings accounts, which the deadline is obviously approaching. So this is, I'm glad you guys are at this event, because if you haven't maxed out the allowance yet, if you haven't maxed it out for your kids, now is really the time to act. But yeah, without further ado, I'm going to hand over to Werner, who will take you through the points that he's going to cover today. And then I think probably the easiest is to leave all questions just to the end as well, because we are going to put this video up on YouTube afterwards. So we'll run through the presentation, but feel free all the way through. If you think of something, hit us in the Q&A, hit us in the chat, and then we'll try and cover all the questions at the end and kind of give you guys the answers there. But yeah, without further ado, let me hand over to Werner. I hope you guys have a good session and enjoy.
Hi, everyone. Hope you are doing well. Thank you for joining us, and thank you, Gary, for the good introduction. To kick this off, I'd like to just outline for you the nuts and bolts that we're getting into around the TFSA, and I've outlined for us 6 points of discussion for today. So we're going to look at why, firstly, you need to have a TFSA, how does it work, the overview of the best performing ETFs in 2021, how you can get global exposure while reducing your local tax bill, how to identify hidden costs and minimize your fees, and the Rand Swiss TFSA. So firstly, why have a TFSA? Well, for us, there are three primary reasons why you should have a TFSA. And as it's said in the name, there is no tax. So no income tax, no capital gain tax, and no dividend tax. Sorry, that all should actually be added. But yeah, if you save on these taxes, it flows directly into your growth and into your savings, which if you look at another savings account over a few years, it's a substantial amount that you're paying to the government. So that's one major benefit of this. And then the next is very low cost, depending obviously on the provider that you use. It's very important to select a low cost TFSA provider. And lastly, you can get offshore exposure on your investments. So one of the major things is that a lot of people don't understand that South Africa is but a mere 1% of the global economy. And if you work here, if you have property here, if you have other investments in South Africa, you're restricted to only this small portion. And there are so many other opportunities elsewhere that you can get a better return on your investments. So those are the three reasons why we think everyone should have a TFSA. Okay, let's get into how does it work. Okay, TFSA rules and regulations. So you can only contribute a maximum amount of 36,000 Rand per year. Okay, that is your annual limit. You also have a lifetime limit that you can contribute up to 500,000 Rand per person. It will take you about 12 or so years, 12, 13 years to get to that level. Now, please note that these figures are subject to change. So we might see that in the budget meeting that the finance minister might increase that 36,000 to say 40,000 or the 500,000 to 600,000. But these are subject to change. But currently, that is what the numbers are. And then any portion of the unused annual limit is forfeited, cannot be carried forward to the next tax year. Then there is no lock-in periods and funds are accessible at any time. Now, I would like just to stress this point that, and we'll get to this in the next point, where you want to have a long-term focus with the tax-free savings account. You need to understand that this is not an emergency account. This is something that you are aiming to use when you are, say, mid-retirement or at a long time from now. It's not something that you can fall back on, but it is accessible. And the reason why I'm saying this is because if you withdraw some of your funds and reinvest the same amount later, that amount is regarded as a new contribution and decreases both your annual and lifetime limits. If you invested 36,000 Rand this year, or this financial year rather, and you withdrew half of that, you cannot go now back and deposit that half in the account again. They will see that as an excessive contribution and they will tax you 40% on any gains on that. Which brings us to the next point, which says if a person exceeds these limits, there is a penalty of 40% on the excess amount. Then you can have more than one TFSA. So if you have a TFSA with other financial services providers, you can, for instance, have one with Rand Swiss. You're not restricted to how many, but the limit of 36,000 Rand is where you are capped. So you can have 12,000 here, 12,000 there, and 12,000 there. So you can have 3 different TFSA accounts, each contributing 12,000 Rand to each year, and that's fine. But you can't contribute 36,000 to each tax-free savings account, unfortunately. And then another important point, parents can invest on behalf of their minor child. However, the minor child will use his or her own annual or lifetime limit. So just take that into consideration. Okay, then here is just a brief overview of some of the asset classes that are permissible in a TFSA. So some of the things that you can invest in is like cash or in the money market, unit trust, and ETFs. And this graph also just gives you an indication of where it ranks in terms of risk level. Just another important thing, sorry, on the ETFs, you can't invest in commodity ETFs. So you can only invest in ETFs in terms of property, bonds, or shares. Okay, overview of the best performing ETFs in 2021. So this is just to give you an indication of what you can expect of your investments, or what I can actually do, the type of products you can invest in your tax-free savings account. So just because it is, ETFs only doesn't mean that you can't get good returns. So the third best performer last year was the One Best Global REIT ETF. It did 41.84%. Now, if you look at the chart, you will note that that is the sell-off that we recently went through, but I've capped it off at 31st of December, so to give you a good indication of what the performance was in the prior year. So before the sell-off, you could see that it did a decent return. It continued to go up, and just the brief reasons why, logistics, storage, multi-let industrials, they saw their values increase, mainly because of the rise of e-commerce, as everything went online, and you've probably heard this numerous times, but as things shifted to online e-commerce, the property values of these real estate just skyrocket, and obviously a lower interest rate environment, which means lower financing costs. So yeah, that was what actually fed nicely into that growth. And then your core shares preference tax ETF is secondly that 43.74%. Now you can see that through the sell-off, if you quickly look at the chart, it held up pretty nice, even despite of other ETFs selling off. And just the reason for this could be that because it's a safe play for most people during these uncertain times. As you might not have known, that preference shares must pay a dividend, and if a dividend is missed, it must be paid back in the future. Also, in the case of bankruptcy, preference shareholders have priority in their claim over common shareholders. So, I mean, we all know that the number of businesses and sectors that underwent severe stress and closed down. And now if you held shares in these companies that went down and you were a preference shareholder, you get priority over the claim. So it's a barrier of safety that's built into that. And then firstly, tech. So the One West S&P 500 Infotech ETF did 44.60%. And again, if you note the sell-off, it was quite something remarkable. But as you've all known, the tech companies the past 2 years just went berserk, and they delivered proper returns, and also mostly their services were in high demand because of all the restrictions and lockdowns and etc. So those were the three best performing ETFs the past year, and those are still available to you because you can buy them in your tax-free savings account. Now, if you did 44.60%, those gains were 100% tax-free, which is very nice. Then get global exposure while still reducing your local tax bill. So this is the nice thing about the tax-free savings account, is that you're not restricted entirely to just South Africa. You can diversify across other regions as well. I mean, you can target Japan, China, European countries, the US. There's so many regional areas that you can target, and that can diversify your investment. And especially if you are highly concentrated in South Africa, this is something that can help you get rid of some of the risk. So three things again here, as I've alluded to before. South Africa is about 1% of the global economy, and generating all your wealth and everything here is a bit of extra risk, and the TFSA can help you to diversify away. So there are currently about 30 or international securities that you can trade. Those vary from property ETFs to bonds and equity. You need to know that your investment will still be in rand, but the underlying value is generated outside of South Africa. And so this serves as a currency hedge in the event of ZAR depreciation against other major global currencies. If the ZAR strengthens, then the opposite will also happen. Okay, then another important thing, how to identify hidden costs and minimize fees. Won't help us that much if we can have tax, all freed and having to pay anything regarding that, but then you are still paying a lot of fees. So the most important thing for me is to identify the fees. You first need to know the type that the types that are charged. Okay, so the best approach to identifying costs and fees, know the different types that could be charged. So I've made a list here of the fees that you most probably will find in all the fact sheets or information regarding funds that you want to invest in. So firstly, like the initial investment fees. So remember, with tax-free savings account, you'll be investing in ETFs, and these funds have their own set of fees separate from what your product provider or your FSP has. So you need to differentiate between the two and know that your FSP will charge you fees, and the fund that you're investing in has its own separate fees. So some of the fees that you will need to identify is the initial entry fees of buying into that security, and then the broker and commission fees that your FSP will charge you. Some JSE costs that can apply, your custody fees, your monthly admin fees, like just general live data. If you're trading on a platform and you want to buy ETFs there, or you have a tax-free savings account option that the product provider might charge a live data fee. Then management fees of the fund, and then your advisory fees. So you might have a certified financial planner, and he's charging you X% in advice fees to advise you to buy certain funds. But then remember that those funds have their own managed costs to it. And then obviously taxes, like the tax-free savings account, you might not, you won't get the income tax, the capital gains and dividend tax, but your transaction costs will incur tax, for example. And then where to find it. So now you have a good idea of what the types of costs there are, and now it's the important thing of knowing where to locate them. So important, like I said, some of these are separated. Your FSP might charge you a certain set of fees, but the funds that you're investing in also have their own set of fees. So firstly, go to the website and look at the frequently asked questions section. Then the fact sheets of the funds that you're interested in, it can be downloaded from the website of the FSP. So for instance, Signia, you can go to the website, you can see the fund, you can download the fact sheet. And this is actually an example on your right-hand side of, I think it's the SIG 500 ETF, that they give you the breakdown of what the costs are within that ETF. And then if you're still unsure, you can, before placing a trade, you can generate a quote on your trading platform, which is also very nice. That will give you a good idea of the transaction costs involved. And then if you're completely clueless and you don't know, phone your broker, send an email, ask them, give me a detailed quote of all the fees. And if you, for instance, don't see any of those fees listed above there, specifically ask for them. What is the fee on that? What is the cost? Like get a detailed explanation from them. So that is a good way of getting an understanding of what you will pay and where to find those costs. And then lastly, the Rand Swiss TFSA. So as Gary mentioned, we offer this mostly as a managed option, and the current composition of the portfolio is made out of 5 ETFs. And for us, this is like like turning the dials on where we'd like to have exposure. So we are still very pro on the US markets, but we still want some exposure to the European, to the developed markets. And what we've done, for instance, here is if we feel less bullish on the US markets in the long term, we can just dial that knot down a bit, decrease our exposure, and say, for instance, increase the exposure in Europe, for example. So this is what we've currently concluded as a comfortable and good layout for the tax-free savings account on the managed side. However, if you are of the opinion that you would like to follow a different strategy, you are welcome then to do the management of the portfolio yourself as well. You will have access to a platform that you can then select the securities that you'd like to buy and trade yourself. Okay, and then you would obviously ask us then, what fees do we charge on our TFSA? So we don't charge any initial fees. We don't charge any advisory fees, management fees, or admin or platform fees. What we do charge is a custody fee. After 3 years, you'll start paying a custody fee of 10 Rand per month, which I don't think is that harsh. And like Gary said, the transaction cost, which we don't charge, it's actually the platform provider that we use. They levy a transaction fee of 0.25%. And what I've done is I took all the all the ETFs that we have in the managed portfolio, and I've calculated what their management fee will be as an aggregate, and that works out about 0.469% per annum. That's what you'll pay in management fees in those respective accounts. So that is all the fees that we charge. And then if you would like to then sign up for our tax-free savings account, because we don't charge any management fees or anything like that, as mentioned, we're giving this as a free product, but you must have one other active product with us before you can qualify. And these include online trading accounts, managed portfolios, retirement products, or structured products. I want to just quickly paste this link for you, but yeah, if you want to then subscribe, you can just click on the link in the chat and just fill out the application form. But as I said, you must have one of these other products before you can then sign up for the tax-free savings account. So that is all from my side. We'll head over to the questions now. I will post this link in the chat section so you can get access to it. So yeah, if you have any questions, please feel free, and we'll take it then from there. Okay, so I'm just going to give a few more minutes. If anybody has any questions, please do post them. So I'm just trying to get this link in the chat box. Okay, I see we're having some questions coming through. Just want to quickly copy this link. Excuse me for taking a bit too long. Okay. Sorry, everyone. It seems like I can't get the link copied into the chat, unfortunately. But if you go out to our website and you head over to the products that we offer, You will see a drop-down menu, and then it will say TFSA in that drop-down menu. Then if you click on it, it will open up a new page. Then you can scroll down and say apply now. And then it will take you to this page that I managed to just get sent through to you. Okay. So what are the different alternatives within the TFSA apart from the managed option? Okay, so we have the managed option, but if you would like to manage it yourself, you will have the full spectrum of the ETFs available on the JSE, and that you can buy them yourself. So we don't have any other managed options. We just have this global, basically focused option that is available. I hope that answered your question. Okay. So the emerging markets ETF, so yes, that is just to get an exposure into emerging markets. It's also, an area that can do pretty well if, they start to develop more, their economy stabilize better, and, business opportunities are much more open in the emerging market areas. So emerging markets, we still like to have a space in that. So that is why we have a certain portion invested in that specific segment. I think if I'm not mistaken, the most unicorns are in emerging markets, and it just shows that the growth potential is significantly high in these markets. We're still happy to invest elsewhere, as we still believe that those are also still good opportunities. But yeah, to have a exposure to these markets is just a good way of diversifying across the global spectrum. Okay. So the TFSA account, you can have it for as long as the government allows us to. So like I said, the funds is also accessible at any time. If in a circumstance that you literally have no other money and that you have to use this money on your TFSA account, you can do that. So there's no locking period after 5, like you can only get it after 5 years or anything like that. So it is totally accessible at any time. There's no specific set time that you need to invest in, like for instance, a structured product where it is available only after a fixed term. But again, I would just like to stress that this is a long-term product, and you should try and have other arrangements for short-term emergency funds or anything to ensure that you can get the most and optimize the most out of this, because no taxes, and if it's long-term, you can realize a good gain. The India ETF, I don't recall seeing any ETFs for India. I do know that there are some Asian ETFs, if I'm not mistaken. I'm speaking on a correction. I'll have to actually just double check this for you, but you're more than welcome to just maybe pop us an email, and then I'll look further into this for you. Okay, so when you are the tax in other jurisdictions, unfortunately, the taxes that are paid there is in those jurisdictions, and only the taxes that are levied here for locally that the South African government has control over, those are exempted. But if there's no dividend agreement between the two countries, or other tax agreements that don't allow you to get away with those taxes that you are eligible to pay in those offshore markets. However, anything charged locally, you're exempted from. The growth, even on the units that you hold, exempted, even though it's generated from offshore asset. Okay. Yeah, so if there's an India ETF coming to Easy Equities, I would most probably will see it listed on the JSE. So yes, then there will be one available on our systems as well. Yeah, are there any other questions? if I wasn't clear on anything, you're welcome to just have a follow-up question or. I'm just going to give 1 or 2 more minutes. Yeah, okay, so it seems like no new questions are coming in. Thank you everyone for your time. We really appreciate it. And yeah, if you have any other questions, if there's anything else that you're unsure of, please do let us know. We're happy to get back to you. And yeah, thanks again for your time today. Oh, one more question. Will we be able to... Okay, so remember, if you are moving those funds, okay, those funds into the taxes. Okay, so for those, for the funds, will Mike, if you can maybe just elaborate maybe on that, but if you can maybe just send us an email or so, again, just to explain and elaborate a bit more, because we need to know if it's like funds, so when it's held in your online trading account that you want to move as an ETF over to your TFSA, whether that will be permissible is something that from my side, I will definitely have to also just double check for you. But as far as I know, it will need to be contributed as 36,000 Rand per annum. Whether you can do that with pure transfer of funds from one account to other is something I will just need to double check. And yes, the government. Okay, so we initially started in August last year. So the overall performance, the last time I checked before the sell-off, it was about 13 or so percent since August last year, 13-14%. We are busy with getting some marketing information or just a fact sheet ready, so that we'll be able to give you nice information on the tracking of the managed option. But yeah, since last year, August up just before the sell-off, it was about 13%. Okay, thank you everyone. Appreciate your time, and I hope to hear from you. Send us an email, give us a call. We're happy to answer any questions that you have and assist with getting your funds invested and helping you to create some proper investments. Thanks.